My name is Tim Copeland and I'm the block's head of growth. Joining me today, we have the co-founder of a cross protocol, Hart Lambur. Welcome to the show. How are you doing?
Hey Tim, thanks for having me. Doing great. Really appreciate you having me on.
Brilliant. Before we get started, just a quick note, if you're hiring in crypto, you should check out Campus. Out of all of your candidates, I hope you pick out the real crypto native hires. Head to theblock.co/campus to get a 3-month free trial. Now, today's episode is about going cross-chain. So, what is a cross protocol in a nutshell?
A cross protocol is colloquially it's known as a fast bridge, a way to move assets like really quickly within a couple seconds between blockchains. What we more technically, it's this intent-based bridging protocol where we sort of shortcut traditional bridges and use third-party actors, which we'll get into, called relayers, solvers, or market makers, to front you assets to just basically make two chains seem like they're seamlessly connected.
Okay. And what are the uh, compromises you make? Is in if it's is enabling swaps that are that fast, are there any compromises that you make in order to do that, or have you just found this amazing solution?
Well, there are trade-offs, right? So, I mean, it's worth the way I typically like to kind of frame it is okay, I got two blockchains, so I'll link it A and B. I'll call it Arbitrum and Base. Um, and these two blockchains are not really connected. They're connected through Ethereum, but they're connected through Ethereum through like a 7-day bridge, technically. And some other blockchains, aren't connected at all. And you want to like move assets between the two of them. How do you do it? So, I mean, backing up and kind of giving a framework here, the naive way of how you would connect these two blockchains is you like maybe have a pool of assets on chain A, you send something to a contract on chain A, and then some message gets sent over to chain B, and then assets get released on chain B. Um, and you could maybe those assets are burnt on one chain and minted on the other, and you're introducing like security assumptions there, or maybe you have like pools of assets on both sides. But the general problem with that is you have to like send this message for each transfer, and that message is slow. Not only because like you have to send the message, but you also can't send that message until you have a sense of finality on the origin chain. So more precisely, it's like if that message is like wrong on the origin chain, you end up just like poof creating money on the destination chain, and the whole thing breaks. So a lot of bridges, a lot of traditional bridges, they're relatively slow here because of this problem. Because like you can't just poof create assets and like the asset issuer just like loses money. So like what's the solution here? What's the trade off? Um, the intent based approach does something different. So on chain A, we take the user's assets and we put them into basically an escrow contract. So they're locked up. And then we start a race for third party solvers who are going to go and fill the user on the destination chain with their own money. And those solvers are going to be the ones that take on the reorg or finality risk. But they're sophisticated actors. They know how to price this. They know what that risk is. And they race to fill the user with their own money. User gets filled like L2 to L2 were like 2 second fill times. User gets filled extremely quickly on the destination chain, and they move on with their day. And then the protocol will like verify the fill happened before it releases the user assets back to the solver. So basically, we're introducing like third-party, semi-sophisticated actors to provide this like liquidity network that connects these chains and does it very quickly. Does that make any sense?
Yeah. How does it work in terms of them filling the assets? Like, if I'm a solver and I see this person, that there's opportunity there, do I just send them my money and hope I'm first? Like, like obviously that's a stupid idea, so I assume it works differently.
Well, it's sort of stupid, but it's sort of not. Like in essence, like if you and I are both solvers and we see an opportunity, so Jordan, your producer, right? He wants to send money from A to B. He puts money in chain A, and we're like, okay, cool, let's go race. There's a contract on chain B that you and I are both going to try to be first to send money through. So we're just going to send money through this contract to Jordan, but like it's the transaction's nonce, so we like know it's Jordan's transaction, and the first one of us to send him money gets the fee associated with that bridge. The second person just doesn't get to like the transaction will revert and it won't let them send money through. So
Okay.
yeah, you're kind of right. We're basically just racing. And like we can go a lot deeper. And should we be competing on speed? Should we be competing on price? Should we be competing on a combination of the two of them? It can get really interesting on how you structure this. But the high level argument is like, yeah, we're gonna see who has the first person to be able to do this according to the constraints of the quote unquote intent, what the user is intending to do. First person wins.
Interesting. It sort of seems kind of similar to TransferWise, or I believe they're now called Wise, where like they were like instead of swapping money, they'll just have buckets on each side, and then they just reallocate on each side, and it just avoids actually swapping the chain.
There's a lot of kind of examples that relate to TransferWise, even like traditional remittance, like Western Union, like way old school business. Western Union, you go in the UK and you want to send money to the Philippines, you like give them money. They're not doing an international wire transfer to the Philippines, which is expensive and crazy slow. Instead, they're gonna like send the user in the Philippines money, and then later on they'll rebalance between their bank accounts in the Philippines. They'll do thousands of these, and then they'll rebalance once a week between their bank account in the Philippines and the bank account in the UK, and send like a wire transfer. And like that analogy, Tim, is actually pretty close to what across and intent-based bridges are doing with all the traditional, like the slow canonical bridges in Ethereum. So if we go back to our example with like Base and Arbitrum, I can connect those two chains canonically using a 7-day bridge. It's just really slow. So the solvers are doing this like fast thing with their own money between the chains, and then they're using the slow bridges or maybe centralized exchanges or whatever other method they want to rebalance those assets periodically.
Who decides the fee? Do they get to choose their own fees? Like, how does that work?
Really good question. The fee right now is set by the protocol. I mean, technically the user can type in whatever fee they want, but solvers might not like fill them. They might say that's too low, which does happen. But the fee is set by the protocol that's saying here's what we think the market clearing rate is for this route, and solvers are competing on that. Lots of ideas on how we can like eke more performance by having an auction there too. Like, hey, what is the let's have solvers compete. But again, it's kind of interesting. Are we preferencing costs or speed right now? Like right now, we're having everybody race to fill for a set fee, versus trying to fill at the lowest possible price. There's potentially cool ways in the relatively near future we might do both. But yeah, that's the way it's working today, and it works pretty well because the fees are so low. Like the costs here are really pretty microscopic that the costs aren't really the issue. Instead, what across and intent-based systems I think are what we're really delivering that's like the unique value prop is speed. Like how do we make these two chains feel like one by connecting them in 2 seconds?
Are you finding much success in terms of number of like I guess amount of money flowing through the protocol compared to other bridging solutions?
Yeah, we are. I think like Cross has been around for a few years now. Sort of really 2-ish years ago is when I think we started growing rapidly, and we are like one of, if depending on how you look at it, like the most used bridge for moving Ethereum around by volume. Um, but we actually, and it's worth digging into, we're much more focused on the number of transactions we do. Um, because there's a few big transactions that move huge volume, which is great. But for the vast majority of users, using Ethereum, using Web3, they're not moving around $1 million transfers or $2 million trades. They're moving around, $100, $500, 10 grand. The median transfer size that we see is about $100 right now, and that's like the sweet spot. So we are really dominating in the number of transfers we're sending between these chains and seeing a lot of traction there.
Okay. And did you have any experience with this sort of as you shifted into crypto? I know you worked at like Goldman Sachs for quite a few years, became an investor. Like, how did you end up doing this?
Yeah. Okay. So going back, like the first thing I did out of college was work as a bond trader, like a treasury bond trader at Goldman. Did that in New York for 8 years during the financial crisis. Um, and there are actually some analogies towards how a cross works versus how bond trading works here too. Um, if you think of the treasury market, you have customers that are going to go ask primary dealers, so Goldman, JP Morgan, Deutsche Bank, whatever else. They ask them like, hey, where can I sell 100 million 10-year treasuries? Like this was literally my job. And it's a request for quote style system where the solvers, or the solvers, the trading desks compete to say, here, Tim, my price is this, and Deutsche Bank says their price is that, and you say, okay, I'm going to trade with Goldman. They gave me the best price. Um, and this kind of request for quote style system is sort of what's going on in across here in some ways. It's kind of like the on-chain version of it, where that kind of like TradFi version, the rules are ambiguous. Like you can kind of, they're a little squishy, the rules, which leads to people accusing each other of like doing bad things. And effectively in Across, we've taken a lot of those concepts, said, okay, instead of it being, trading desks, we've got solvers, and the rules are completely transparent and clear on chain. And we can have this like fair and efficient competition to solve this problem of connecting these chains.
Yeah, that makes sense. And you mentioned intents earlier. Obviously, this was quite a big discussion point, sort of over like the last year or so. What, like, how do you use them, or at least like, what are you trying to enable with them?
Lots to unpack there. So we are in many ways the original intents protocol, or at least the original intents protocol that got used. And so I've had a, I've done a lot to push this kind of concept. Our team has done a lot to push this concept forward. And like, what does this sort of buzzword mean? I mean, I don't want it to be a buzzword. I want it to be real. It just basically means like, hey, what are you trying to do? What is the outcome you want on the destination chain? If the outcome I want is I want to like I'm starting here with like 50 USDC on chain A, and I want as much USDC as I can on chain B. Okay, cool. My intent is give me max USDC on chain B. If my outcome is I actually want to take my max USDC and deposit into Aave, that I can specify too. And the intent concept basically works really, really well in this multi-chain world, where I can say what I'm looking to do is have this action, this transaction completed on this destination chain. Who wants to do it for me? And that's the core concept. So and when you have this multi-chain world, in order to make this be fast, there really is no other architecture than having these solvers compete to do that action. So we put together a standard for this, ERC 7683. None of your readers are going to remember 7683, but that's the listeners, I should say. That's the number. We wrote this with Uniswap, co-authored this standard with Uniswap, and it's been actually really pretty broadly adopted as a standard specification for how to like create and specify these cross-chain intents.
Okay, and then how does that work for the user? Is it that you go into like a website and it sort of gives you options? It's like you put drop down list, you say I want to swap this to this and this protocol and this chain, or is it like text based? You just write it out. Like what's that experience like?
So the front end experience can kind of be any of those things. What the user technically does is sign a message that specifies their intent on the origin chain. So all they have to do is like sign a message on the origin chain. How you that says here's what I want to do on the destination chain. Practically speaking, like if you go to the Across front end today, Across.2, it looks like a bridge. You say I want to move 100 USDC from A to B, from Arbitrum to base. You like click the buttons, 100 A to B, hit send, and you sign a message, and that's where the intent is created by the app. But like yeah, we've got like hackathons where people do the same thing in text form. I type out natural language. Here's what I want to do. That gets interpreted probably by like an LLM. Here's the user's intent. They sign that message and they send it to the same network of solvers that we have today to go and like fill that. There's stuff we can talk about too once we like move into this world of like smart contracts everywhere, which is happening now ish in Ethereum with the Pectra hard fork and this upgrade called 7702. So we're going to have the ability where users' intent could be here is the action, here's the permission to action I want to execute on the destination chain. And my intent is basically who wants to, here's my signed message that proves I want to do this action in this smart contract um, wallet. Uh, who here wants to go and fill it? So it's pretty flexible, but it all distills back into user has a transaction they want to have happen on the destination chain. The intent is the way to specify that.
Okay, and how far before all of this is completely hidden under the hood in a very nice user experience? Like, are people building apps where the sort of, the user, maybe it's a vault product or something, and then behind the scenes, it then has all of this puts into Aave on this chain, and all of that happens behind the scenes?
Yeah, it's happening. You know, Uniswap integrated across in a way that lets you do cross-chain bridging in a way that you like the user doesn't really see because the intents are being specified behind the scenes. It's probably like our biggest, most broadly used example of it. But there's lots and lots of this. There's other like yield protocols that also say, hey, I need to have this deposit on Ethereum, but I want to make it accessible to the user to make this deposit from all the other L2s. And so you can imagine that they integrate across to just say, my intent here is to, I'm starting from Arbitrum, but I want to end up with this vault deposit on Ethereum mainnet. It's like a perfect use case. Where I think this should go in many ways is it does go to the wallet level, where wallets make it easy for applications. They don't have to actually even, like developers don't even have to specify any of this. The wallet's just going to be like, hey, you're trying to execute this transaction on chain X, and you don't actually have money on chain X, but I'm going to make it so you can pay for that transaction from chain A, and all you have to do is like click this button. So maybe like the right mental model to push to the listeners and viewers is like, I've been toying with this a little bit. Think of it as like it's like a checkout at Amazon where I'm trying to buy something. The thing I'm trying to buy here is a transaction on a specific chain. But my payment options are I pay for it on A, I pay for it on B, I pay for it on C, like whatever my payments options are. And I think the right experience is the wallet is going to abstract away and show you the payment option that makes the most sense for you. So the developer doesn't have to do a thing. The developer is just there. It's like, here's what I want my application to do. And the user also doesn't have to overthink it. The wallet's just being like, hey, user, you're trying to do this thing. Here's the best way to pay for it.
Okay. How long do you think until those apps are, you know, available and widely used?
What wallets do is hard to predict here, right? Um, I think that we'll have examples of this like very, very soon. We have a proof of concept that we can throw around that sort of already does this too. Um, but it's hard to know. I personally don't exactly know how wallets are going to evolve. Like, is it going to be wallets like MetaMask, Mask, and Phantom? Or is it going to be more of these like embedded smart wallets that get used? And how do those wallets like look at some of this chain abstraction stuff? I'm not totally sure. So it's like a very good point. Like internally on our team, we're trying to make a cross easy to use in our front end, like as a traditional bridge. We're also trying to make it easy for integrators like dApps to integrate across in their application because they don't want to like wait around for wallets to decide things. And then we want to talk to wallets, or we are talking to wallets about like, hey, how could you integrate this much more deeply into your wallet experience so it's like totally disappears. I expect that happens in the next year or two. A year in crypto is a long time, but it's very hard to predict.
Do you think it could help new people like get into crypto if you finally get to this point where it's actually quite easy to access? Because obviously, there's things like DeFi yields that crypto, natives are able to access. They're a little bit more complicated to understand and get into. But do you think this sort of thing could be a way for people to find crypto more compelling?
I mean, 100%. I think it like needs to happen. Um, your bottleneck right now is still going to be how do I get my first crypto in the first place? So there's like the fiat on ramp problem, and we're not the ones solving that. And I think that's still a centralized exchanges. But like once I have some crypto, it's in some wallet. And I want, like, the thing I tell my team is like, users just want to click buttons and have things happen, right? Um, and that's the vision we should be pushing towards, and everyone, people are. So I'll have some money in a crypto wallet, I click a button, the thing happens quickly, instantly, at least sub 2 seconds, cheaply. I'm not thinking about what chain that stuff's on. I'm not even really thinking about what asset it is necessarily, and I'm just able to click around, use these dApps. It works quickly and cheaply.
Yeah. I was just thinking that it's kind of there is a bit of a, let's say, use an exchange to um, buy crypto, but then there's these other platforms that you then have to move to, and obviously, that often requires like using private public addresses and sending money that way. I did wonder, like, at what point could you see platforms linking up in a way where you almost connect the two platforms together, and then within that you can send, and it handles the actual sending of the funds on the back end. Like, do you think projects would ever work together like that, or do you think they
I
might not
think
want to?
yeah, I think projects will work. Like, okay, this is an interesting question. I don't really know. This is not necessarily where I thought our conversation would go, but it's like protocols, DeFi protocols. I think want to work together. Like, everybody has incentive. We want, like, more people to self custody crypto or have crypto in wallets. Um, Centralized exchanges have different incentives. Centralized exchanges, like, want to keep your money on the centralized exchange. So they have a delicate dance here where I think the centralized exchanges realize that if they don't offer any ability to get into Web3, they're going to, like, lose users. So they have to. Um, and I think some exchanges like Coinbase truly do, I think, believe in, like, an on-chain future, and that's their gateway, or that's their vision. Um, but generally speaking, like, the centralized exchanges kind of want you to just keep your money on the exchange and trade assets back and forth. That's, like, how they make money. And so I'm bullish that in the sort of more friendly regulatory environment we have, there will be more fiat on ramps that will let users get money in ways that aren't just through centralized exchanges. And they'll work better, and they'll be more robust, and it'll be, like, socially acceptable and all this other kind of stuff. Um, and then I think you're looking at, like, a great future here. And then, of course, there's many parts of the world where, like, stable coins are becoming an increasingly dominant way of actually paying people, and so that's great too. Like, then you've kind of sidestepped that whole problem as well.
Yeah, Coinbase is quite clever because they're moving people into crypto, but typically that's onto the base network where they make sequencer fees, so they kind of profit from it anyway.
Good business.
Yeah. Um, cool. So maybe I guess moving on to some more like general questions. What's one crypto project, obviously other than your own, that you've been trying out recently?
Uh, I do play. I mean, it's probably a pretty mid answer, but I do play with Hyperliquid. I think it's pretty interesting right now. Um, as a market maker, I think some of the stuff they're doing around just transparency on on-chain liquidity is super fascinating. Um, don't totally know where it goes, but I like the vision of an on-chain Binance. I like that. Um, I also, in the same vein, Uniswap is a project that I've known for a very, very long time, since, like, basically day one. And I think that they're also kind of like the UX friendly version. I would like Uniswap to become also like an on-chain Binance, Unichain. So I think those are really interesting kind of
Yeah. How do you think
things
Unichain's
going on.
going?
I think it's going okay. Full disclosure, I'm on the board of the Uniswap Foundation, so I'm biased here. But I think it's going okay. I think some of the recent growth is pretty good. Um, I think having a home for Uniswap liquidity does make a lot of sense. Um, and yeah, I would love to see Unichain become like another on-chain Binance that
Mm.
gives users an ability to trade, like, all the assets without the hurdles of, like, okay, did this exchange list this asset? Like, it's permissionless in that regard. I think that's huge. Um, I also it becomes like a very transparent, scalable architecture for exchange of all of these assets that crypto is creating.
How competitive do you think it is with Hyperliquid? I mean, I guess one element is, I wouldn't say I'm an expert here, but Hyperliquid obviously sort of is for the very sort of experienced traders, whereas Uniswap, as far as I understand it, is more typically for your more basic swaps. And I don't know if they have the same sort of level of experience, um, user experience, I guess. But in theory, they could have, now they have their own chain, they could have a similar sort of product to Hyperliquid.
I think, you know, Uniswap, knowing the team well, they care a lot about execution. And I think the designs they keep pushing forward really do continuously improve the execution in a like a automated market maker sense. And you know, you go back over the history of Uniswap. When they first came out, people thought it was an idiotic idea. There's no way this like automated market maker is going to provide good liquidity. Um, and maybe they're kind of right in V1 and V2, and then V3 came along, and you're like, okay, holy shit, like the concentrated liquidity market here is giving better pricing on like the ETH USDC pair than Binance had. It was pretty wild. Um, and yeah, so I do agree with your like high level take that Hyperliquid comes across as more for the pros, and Uniswap is a little bit more friendly in their vibe. But I also do think under the scenes, the mechanism design of some of those protocols is like really cool and will allow for really great execution. And you know, we take a lot of this is the stuff we care a lot about it across too. We're like, okay, hey, we're not an exchange like Hyperliquid or Uniswap, but when we start connecting assets between chains, we like kind of are. It's a little bit different, and we want to design the mechanisms that allow for like this super efficient, seamless flow of value between these chains, really instantly and like with really quickly. And we like Hyperliquid can't do this because it's a single chain, right? But across has a very interesting place in this world of how do you in this world where you have many chains, there's going to be needs to move assets between these chains, potentially a huge need. And if what our goal is to become the venue for absolute best execution using kind of like all the tricks that the single chain players are doing, but figuring out how we do this in a cross chain way too.
Yeah. Okay. And where are we in the market right now? Which this is a bull or a bear market?
Oh man, my macro views are all over the place here. Um, I am uh, Tim, like I am a as a treasury bond trader at Goldman, like I do have a little bit of a macro bias towards like, hey, the U.S. dollar has been like reserve currency, and I do think some of the policy decisions are sort of threatening that. I don't think people are going to be like dumping U.S. dollars, but I think they may, I think institutional investors may shy away from them, which may make a difference. I think that that's like very bearish risk markets generally, um, but I think it could be quite bullish crypto and like Bitcoin in particular. I do think we're in an environment where Bitcoin is an amazing asset that if it's risk on everywhere, Bitcoin will do well, and if it's like de-dollarification, I actually think Bitcoin can do pretty well too. So I'm like I see a lot of macro reasons to own major crypto assets, but I don't know whether that means we're in a bull or bear market. I think we're in a weird market right now.
Yeah. And any thoughts on whether strategies, Bitcoin accumulation will end up blowing up and taking the market with it?
I do worry about that. Um, I think the financial engineering behind strategy, microstrategy, and the copycats is interesting. Um, I do have in my own experience watching financial markets when like things don't go up forever, and so I do worry about that. I I I think some of it's very so again I'll take a very like modest view here that I like that we've got more people going to Bitcoin. I like more buying of Bitcoin. I like more buying of ETH. I think that's super cool. The Ethereum version of it, SharpLink, I think is pretty interesting. Um, but I worry that there will be at some point, maybe far in the future, there will be like some stresses that do cause some forced selling of crypto. And I don't like forced selling of crypto because I own it and I want it to go up. So
That's fair. Do you think mindshare platforms like Kaito are helping or hurting the vibes?
I think Kaido is super cool and super interesting. I think it's natural to kind of financialize mindshare to some extent. I think that's a lot of that's the secular trend in everything we're working on, where financialization has been happening for 50 plus years and it's going to keep going. Um, I do think that Twitter is full of bots and chills now, which is hard to navigate. So, and I just think, generally speaking, we're going to get better and better filters with all of our LLM friends. I think the more people, the more real people are actually writing their views, the better. I think it's hard to filter through the noise right now.
Do you think platforms like Ethos might be able to help with that?
I'm not really familiar with them.
Okay.
Um,
For context, Reputation platform basically is a review-based platform.
uh, I, I have. There's so much going on, man. I can't track all the things all the time. So I'll try to be
For sure,
real
for sure.
and like, yeah, don't really not deep on that one.
No worries. And are you surprised to see Pump.Fun raising $1 billion?
Um, no, I think it's smart, and so I wish them. I mean, I wish them luck. Yeah, I think it's going to. Yeah, I wish them luck. I don't love everything about Pump Top Fun, but you got to be super impressed by their user acquisition. It's pretty wild.
Awesome. All right. Well, that's all we have for today. I want to thank Hart for joining this episode. And as a reminder, a newsroom works tirelessly to get you accurate, informed crypto news. If you want to stay ahead, read the blog. Thanks, and see you next time.
Thanks, Tim.